Hello, everybody, and welcome to another installment of SCF's webinar series. My name is Matt Brown, and I am a project analyst with our origination and acquisitions team here at Sustainable Capital Finance. Today's discussion will center around financing solar plus EVC projects with NEM 2.0 pricing. We appreciate our PV and EVC developers joining us here today. Let's get started. To start off today's webinar, I'll be providing a quick overview of sustainable capital finance for those of you who are unfamiliar. I will then outline the clear value proposition for solar-powered fast chargers for commercial and nonprofit property owners with an added net metered PPA component. We'll then summarize the NEM 2.0 program versus its unfortunate counterparty, NEM 3.0, and discuss the sudden urge to secure projects into NEM 2.0. We'll then talk about the optimal EV site and configuration for a property owner, while showcasing a quick snippet of how you can model the number of charging stations and a revenue share figure for your off-taker all in a matter of minutes, utilizing our soon-to-be-ready quick quote function. We'll then finish up with next steps in Q&A. SCF is a third-party financier for commercial and industrial scale projects, providing energy as a service for municipalities, schools, churches, golf clubs, and other commercial property owners. SCF works directly with install partners to provide takeout financing and development collaboration as we work together to energize projects as quickly as possible. SCF has over 200 million in contracted distributed generation, which includes solar, battery storage, and electric vehicle charging in collaboration with some of the market's largest independent power producers and asset owners. The value proposition for electric vehicle infrastructure for property owners is clear. Interest for EVs has increased dramatically over the last couple of years, particularly in California, while charging infrastructure has lagged well behind. By incorporating EV infrastructure for your off-takers, they are going to realize immediate value. With no investment or ongoing maintenance needed, and increased revenue through the usage of the stations and via PPA savings, the stations will not only act as an added amenity to its current users, but it'll attract new ones, all while knowing they are working with extremely reputable and financially viable investor partners with billions in market cap. As mentioned before, one of the value propositions for this structure is the incorporation of a power purchase agreement, or PPA, typically set at a 10% reduction in cost. The PPA rate will be enacted by all solar-powered energy that is not used by the chargers, resulting in a reduction of operating expenses for the facility and an increase in NOI for the business. There's also no upfront cost either, and SCF would own and maintain the system for the life of the contract. Is the off-taker tax exempt? That's not a problem. We can monetize tax credits on their behalf and pass it through in the form of savings. Does the off-taker have ESG goals? Installing charging stations is a great way to achieve that. All in all, the revenue share assumptions and PPA savings are extremely appealing to our off-taker partners. And with that, I'll pass it off to my colleague, Dan Holloway.
Thank you, Matt. As Matt mentioned, my name is Dan Holloway. I head up our originations and acquisitions team here at SCF. So let's dive right in. The term net energy metering, or NEM for short, is a term that describes how some utilities manage solar energy that is exported to the grid. The way it works is that when a solar system is producing more energy than a facility needs, that remainder is exported back to the grid so that other utility customers can take advantage of it. Historically, the energy that is sent back to the grid is credited to the owner of the solar system at what we think of as retail rates. Under the current NEM rules, a program currently called NEM 2.0, customers in California have historically received, on average, about 30 cents per kilowatt hour for any electricity that they've exported to the grid. However, a new rule was just passed this January called NEM 3.0, and under this program, the rate that utilities are required to pay for exported electricity is something much closer to wholesale rates and is estimated to be only about 8 cents per kilowatt hour, or about like a 75% reduction compared to what customers received under the NEM 2.0 program. So this massive reduction is going to have a very significant impact for all new solar systems that are installed after NEM 3.0 goes into effect. So currently, the final date that a project can be approved and grandfathered into the current NEM 2.0 rules is April 13th of this year. This means that we have a very limited time to offer the current PPA slash EV charging revenue share program that we're covering today. Once NEM 3.0 goes into effect, we will have to adjust potential PPA rates, revenue share percentages, and we'll most likely have to add storage to a number of future projects to make them pencil. And we just want to make you aware of this because there's still time to get some projects under the NEM 2.0 wire, and we definitely want to make that happen if possible.
So what has to happen to get under the NEM 2.0 wire? Well, there are a number of things, so let's go through them here. First off, a site license agreement must be executed between SCF and the property owner. This agreement basically allows SCF solar and EV charging equipment to remain on the property for the duration of it. Prior to signing this agreement, we will, of course, provide a term sheet summarizing all the pertinent deal terms, and we'll be sharing that with the property owner. Secondly, an interconnect application must be filed with the utility. If we receive an approved interconnect reservation from the utility, we can then be grandfathered into NEM 2.0. An interconnect agreement, for those of you who don't know, allows us the right to attach our equipment to the utility's grid. And this application requires a few things to get accepted. So we're going to need a single line electrical diagram, we'll need a meter number, a copy of the signed agreement itself, and finally a completed interconnect form. All of this work takes roughly 4 weeks to complete, and all we need to start this process is simply a signed term sheet, as I mentioned earlier. Based on this timeline, we will need projects to be submitted by no later than the end of February to have a really good chance at getting grandfathered into the NEM 2.0 structure. Any later than that, and our chances of falling into NEM 3.0 go up pretty significantly. So just to keep in mind, the end of February is going to be the target date to get projects submitted. So the reason we're so excited about the EV market is really broken down within this next slide here. Let's start off by touching on some of the highlights of the electric vehicle market for 2022. First off, 2022 was a heck of a year for EV sales. The most interesting stat in my mind anyways is that over 20 automobile manufacturers launched their very first EV model within 2022, with some launching more than one. EV sales topped 900,000 units in 2022, up by more than 65% from 2021. EV sales as a percentage almost doubled, going from 3.1% in 2021 to 5.85% in 2022. And based on current growth projections, EV sales are expected to reach more than 50% of all U.S. cars sold by 2030. And just based on 2022 sales volume of 14 million units, we would expect to see that by 2030, more than 7 million EVs will be hitting the road in just that year. And when you add up all the EV sales between then and now, you're going to have something north of 15 million EVs on the road by then. And that, my friends, a lot of EVs. And all of them are going to need to be charged, and they're all going to need to be charged pretty regularly. So let's see what's happening on the EV charging side of the coin. In 2021, there were a total of 114,000 publicly available charging stations in the US. Of those, 22,000 were what we call fast chargers. We denote those as chargers that have a capacity of between 50 and 250 kilowatts. And 92,000, or the remainder, of those were level 2 chargers, and those typically only have a 10 kilowatt charging capacity. So pretty broad disparity between the two types of chargers. To simplify it, a fast charger can charge a typical EV in, let's say, 20 to 40 minutes, depending on a bunch of different variables, whereas a level 2 charger is going to take you anywhere from, let's say, 6 to 10 hours to charge the same vehicle. If you were to compare the total number of EVs on the road today, about 2.3 million, versus the total number of publicly accessible chargers available, about 114,000, you would see the ratio is more than 20 to 1. Another interesting stat here is that while the number of publicly accessible chargers grew by 40% last year, pretty substantial, the number of EVs sold grew by 65%. So the EV charging market is actually falling well behind the EV market itself. Bottom line here, we simply need a lot more chargers out there. And so that's what we're looking to promote here.
So let's talk about what makes a good location for EV chargers. During our investigation into the EV charging market, we found that there are a number of factors that lend themselves to charging stations that have high utilization rates or ones that get used the most. So let's go through those. The first factor is any areas that simply have a lot of EVs. We can determine this through publicly available data showing EV sales by zip code, but you can also just look out in your customers' parking lots and see if they have a lot of EVs out there. We're also looking for sites that have a decent amount of traffic based on the business that's located there. So if your customers have a mall or a restaurant, there are already going to be a lot of people visiting their locations, and some percentage of those will have electric vehicles. The chargers themselves will bring in additional customers, but it's nice to have a base of customers to work off of. Sites that are close to major traffic arteries are also high on the list. We don't want people to travel, a long way from their current traffic patterns to try and find an EV charger. If a site's only a half mile from the freeway, this one's going to be superior to one that is, let's say, 5 miles from the freeway, all things being equal. And lastly, we need enough room to install solar on each site, and that can be done on the roof, or we can certainly install panels on carports as well. Now we get into the numbers. We've put together a pretty representative project so you can see what all of the equipment actually costs. In this example, we'd be installing 400 kilowatts of solar on a carport in the parking lot. In addition, we would be including 4 180 kilowatt fast chargers as well. When you add up all the equipment costs, installation, permitting fees, etc., the total cost of the system would be about $1.76 million. We just want to provide you and your off-takers with an estimate of what actual equipment costs would run. So what does all this mean to you and your customers? In this example, we're providing both a power purchase agreement as well as a share of all of the EV charging revenue to your off-takers. For this project, we're providing a 10% share of the EV charging revenue and a PPA rate that provides a 10% savings from the property owner's current cost of electricity based on the amount of electricity that we ultimately send to their facility. Understand that whatever electricity is generated by the solar system, it can either be sent to the EV chargers themselves, to the facility, or to both. What that means in terms of dollars is shown in the yearly figures just above the graphs. In year one, we assume that it will take some time for people to find out that a fast charger has been installed in their area. All of our chargers do show up on the main platforms such as ChargeHub, PlugShare, ChargePoint, etc. But it can still take a few months for people to build new habits. With this in mind, we estimate that about half the electricity created by the solar system will go to the EV chargers, and the remainder will go to the building on site to offset electricity usage. Between the two, about $5,000 will be generated in PPA savings to the property owner, and almost $17,000 will be generated in EV charging revenue itself. When you combine both these amounts, the property owner would pick up a total of about $22,000 in combined PPA savings and EV charging revenue, and this is with no out-of-pocket expenses to them. So think of it this way: for your customers, this is a way for your customers to monetize parking spaces that they currently provide for free. In year two, we assume that the EV chargers will gain more usage as more and more people realize they're there, and because the number of EVs on the road will have also increased pretty dramatically in that past year. By the end of year two, we estimate that all electricity generated by the solar system will be used by the electric vehicle chargers themselves, and that none will be left to offset the building usage. Please note that the revenue generated by the EV chargers is substantially greater than the savings generated by the PPA, so this is actually a very good thing. Based on our estimates, the property owner would generate over $45,000 in EV charging revenue in year two, and you can see where the revenue share numbers go from there. If you are an EPC or a developer that's already offering solar and solar plus storage, we think adding EV charging to that mix is going to look very attractive to your customers. And if you already have some off-takers in mind, let's certainly get the ball rolling as soon as possible so we can work to get them grandfathered into the NEM 2.0 program. So with that, I'm going to hand it back to my colleague, Matt Brown. Matt, take it away.
One of SCF's big goals for 2023 is to take projects from term sheet to energization much quicker. And the way to do that is by simplifying the entire process as much as possible. That entire process is laid out right here on this slide. Once a developer is registered on the suite, we need to verify two things: the proposed solar design to verify production, and the off-taker's current avoided cost of energy per kilowatt hour to verify the PPA rate we could support. A copy of most software services will do for the former: Helioscope, Aurora, PVSys, etc. An energy toolbase proposal or 12 to 24 months of utility bill or interval data will work for the latter. From there, we can develop a proposal presentation to share with your off-taker, discussing how the PPA and revenue share agreements work while answering any other questions about SCF. A term sheet will likely follow the proposal and is a non-binding agreement that allows all parties to confidently move forward to further project diligence in good faith. That further project diligence includes, but is not limited to, real estate and title, credit, which generally is the last 3 years of audited financials, environmental surveys, and other forms of diligence. Finally, we'll agree upon an EVC agreement with you and a revenue share agreement with the off-taker, setting in motion the opportunity. Where you'll start with all of this as you all enter projects in the coming weeks to secure NEM 2.0 is on the next slide here. This slide is a snippet from the quick quote page for EVC revenue share. Our valuation team over the last few months has worked diligently to source and analyze EV usage data in multiple cities across the state of California, breaking it down by zip code and allowing us to accurately project usage assumptions based off a few inputs that you can see now. We'll ask for the estimated solar size, the respective production and charger rating. We'll then ask you to provide the property type, whether it's within a mile to a state highway, and the estimated placed in service date. All opportunities are locked at 20 years. Within a short period of time, you will have an estimated number of chargers and revenue share figure in front of you. If you like the terms shown, you'll be able to create the project, where an SCF analyst will follow up with you directly to request any necessary information before moving forwards. That'll take us to the end of our webinar and initiate our scheduled time for Q&A. If you have a question, please feel free to submit in the question box, and we'll try to get to as many as possible.
So it looks like we've got a question here to start regarding EVC install costs. Dan, I think this is referencing your slides. So it might be a question for your brain.
Yeah, absolutely. Good question. So the question was for the $1.40 EVC install cost, does that include the main panel upgrade cost? It does, but please note that in almost all cases, we're going to have multiple EV chargers on site. So that's an average across multiple installs on the same site. So we would expect to include things like panel upgrades, potential transformer upgrades, and trenching costs. So good question.
A question here about just the process and timeline after a project submitted into the suite. So ideally, it's get you registered in the suite, get you a quick demo, just kind of show you how to exactly use the suite and its functionality. As you see, it's pretty straightforward as we have it get live as soon as possible. But after the project's submitted, you'll have an SCF analyst reach out to you directly, confirm that avoided cost analysis, whether that's through utility bill upload, which is a function that we're going to have added into the suite, which you'll be able to click, upload utility bills. If you utilize the software known as Energy Toolbase, they do allow you to run an avoided cost analysis on their platform utilizing interval data and or utility bill data. If that's utilized, then we can just ask for a copy of the ETP proposal. Once we get that and the site design for the solar, then we can move forwards with validating pricing, prepping a term sheet, post proposal ideally, or we can get to the term sheet as soon as sort of the customer's decision-making timeline is moving. That was a good question. Looking down here, reading a few. So SCF has been in the market since 2013. As we mentioned earlier in one of the slides, we have over 200 billion in contracted distributed generation. A lot of that has been with our primary funding partner in Expires, but we have over several other asset owners and funding partners that we work with to kind of build out what should be in the next few years a lot more than just solar and battery, but solar, battery, and EV charging as well. So that's a good question. Dan, you see any?
Yeah, so Matt, there was a question here on California versus other states. So good question. The answer is that currently we're starting in California. We have the highest demand here in terms of number of EVs on the road. The other thing is there are credits within California called low carbon fuel standard credits that we're taking advantage of, and we've built a lot of our modeling around some of the local incentives here. We are doing a pretty extensive analysis on a number of other states, primarily on the southwest and northeast right now, and looking to see what other states incentive structures allow for this type of structure. And we will be producing some announcements on that in the rest of the year. So keep an eye out for that if you are not located in California, but something we're definitely working on.
Great. Well, I just want to, I think there's one more question here. So options after PPA term is over. So buying out the system at fair market value is one option. You can obviously extend the PPA agreement an additional 5 years. We can also remove the system, return the property to its previous status as it was before building out a system. But that looks to be most of our questions here today. We'll give you guys a few minutes back, keep it short and sweet for this installment of our webinar series. We appreciate all our attendees and questions asked. We look forward to hopefully closing some opportunities and NEM 2 pricing here in the next month or so as we look to beat this deadline. So thanks, everybody.